Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, December 16th. It is all the way at 7:25 as I'm starting the video. I've been battling my recording software. Every once in a while it acts up and gives me trouble, so I apologize for this video getting out late to you, but hopefully I can get through it and get it out to you with some relevance before the bell. So just quickly, and don't forget to run the video at 1.25 or even 1.5x for new visitors. So looking at futures, the rally is extending this morning, up about 1% across the equity space. Oil's up 1.75%, copper 3%. Bitcoin's flat. We do have a lot of macro this morning with jobless claims, industrial production, housing starts, and a flash PMI. Lennar was down about 7% the last time I looked on earnings last night. So you may want to add that to your bracket trade list. Housing has been inordinately strong, trading at the highs. So I would anticipate that Lennar will be bought up and that gap will be closed. So that could be a nice bracket trade for you to be aware of. This morning we've got Adobe reporting before the bell. We've got FedEx after the close today. That'll be a closely watched one. They've been really challenged in recent quarters with all this inflation eating into their margins. For everything that they do, the cost is going up, from labor to fuel to transportation costs. Everything has been eating into their margins, and so it'll be interesting and probably important to look at what their guidance is for the holiday shipping period and then into 2022, what they may see for that business. Then, of course, UPS will be in that same kind of boat. So quickly, just summarizing Jay Powell and the FOMC yesterday. If you look on the blog, you'll see that there was a lot of market positioning that required covering into that rally yesterday. We know that institutions had been degrossing after the bout of volatility that we saw after Thanksgiving. Degrossing is a fancy way of saying selling, bringing down their overall exposure. And all that kind of stuff is rules dictated, right? When you get VIX into the 35 range, they just got to bring it down. And also, for people that maintained, whatever long exposure that they had going into Powell, then they had put protection for those positions in the event that Powell were to come out more hawkish than expected. Of course, when that didn't happen, all those positions needed to be unwound, and that whenever you've got short positions that are being covered, you're essentially buying the market. So that was rocket fuel. Now, moving on to the Fed very quickly. I feel like I'm pressured here, having a late video. But to make a long story short, no drama. Everything as expected. They doubled taper, going to wrap up in March. They've got 3 rate hikes penciled in for 2022 and 3 hikes penciled in for 2023. I think one of the most interesting things that came out of yesterday was, remember that Powell's most recent pivot was to eliminate that transitory inflation language. But then in the dot plots, they're showing that inflation in 2022 is like 2.6 or 2.7%. And we know we just got an inflation print that was pushing 7%. And actually, we know, real inflation is way more than that, probably over 10%. But of course, they jack around with the calculations, and inflation is always underreported. So Powell's got the challenge in front of him: one, kill inflation; two, keep the economy on track and job creation on track; and three, keep the market elevated. And as I've said previously, I think if push comes to shove, if there's persistent inflation, some type of a problem, I think the market's going to be the odd man out from the standpoint of, if something has to be let go, I think it'll be the market. If he has to jack rates faster or whatever, I think he's going to do that now that he's been reconfirmed. And job one is to bring inflation back into line. So that's out there. But for now, the rally persists. We're going into a very positive seasonal time into the end of the year, whether you want to call that a Christmas rally or whatever. I think the short-term pressure has been lifted off of the market. We had gone into the print looking at our oscillators that were getting close to oversold, but not quite there yet. So all that tension released in those oscillators, and now they're back up towards the middle of the range with the big rally. So they never got to oversold. And of course, they crushed the VIX. We're going to look at that in a second. And we still have an open gap above on that will get, of course, filled out in time. Who knows when. So taking a look at Treasury yields, they barely moved yesterday, which was interesting in and of itself. We're right here in the middle of the range between 1.4, 1.5%. And so our next big move, if you will either be a breakout or a breakdown. And I think a breakdown would be something COVID related type of a situation where the expectations would be for a slowing economy. So looking over at the VIX, here was that open gap that we were thinking might get filled yesterday with some kind of knee-jerk reaction. Of course, they went the other way. They crushed it back down into this lower zone here at about, pushing 19. So that may even drop further today if the rally ensues. Oh boy! Just noticed here I lost my SPY charts. I'm gonna go on and look at the Qs. Maybe I'll come back and circle up and pull up those SPY charts for you in a minute. Here's the Qs. We had formed this base. This was Monday, Tuesday, and then of course yesterday with Jay Powell's announcement, the moonshot. But you can see here a really nice base had formed in the right down here at 84. Really, the bears had lost power even yesterday in the morning weakness. They couldn't break 384. And depending on how you as a trader approached that Powell announcement, if you were a guy that said normally, well, let's just talk about normally. Normally, when you see this basing action, that's your cue to get long. Why? Because you're at a support level, and the bears haven't proven that they could break it. So with taking the event risk out of it, normally this would be a buy point. So, but we did have event risk, and if you were sitting right here long, of course, Jay Powell could have taken it the other way and, I want to say wiped you out, but you would have been stopped out pretty fast. So just looking at it, let's say you went in like, I want to be flat, or in my active trading, I want to wait to see what happens. Where would your buy points be? Well, I think you're realistically, your first buy point would have been right here, give or take at 390. We saw that was the high, the reach up high for this candle here, and a place that we had marked on the chart. So that was a buy location. The next buy location was here at 392, a level that we had, and then 394 was another buy location. So if you had been aggressive and had adopted that, our mantra, leaf on a stream, no biases, happy to go north or south along with the currents, and using your technical ability to recognize that recapturing levels from below is bullish and indicates a buy point, and you saw this, levels being recaptured, you had ample opportunity to grab long exposure over the course of those 2 hours. And it did go fast, but you can see here there was time. You had levels here, 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 here to buy. So now today, I think we've got a very distinct level here at 398 and a half, and then we've got an even more important level here at 401, which would open up the door for a run up to the prior highs. So, and remember, if we're up 1% in the pre-market and that holds to the cash open, you're going to have another gap up here below price, right? So just handle that the way you always do. You can stay long against the top of the gap, but if they decide to do a flash lower to quickly fill that gap, then you would abandon your long positions for a quick shorting opportunity. 1% is fairly large for an opening gap, so I think it would be worth it if you're a short-term active trader, especially if you held your long from last night, and then you get another gap up 1%. I think you'd want to quickly book that win, especially if price moved back down into the gap. I mean, why sit there and watch 1% disappear? Go ahead and book that profit right away, and then you can either recalibrate after the gap fills and get long again, or you can try and grab a quick short and get that 1% gap fill going back. Or if it stabilizes at the top of the gap, then you can get long against it with the comfort knowing that you already booked your win from yesterday. Let's take a look at IWM. Not quite as dramatic, but still a nice bar. I think your pivot point today is right here at this 217. Price will encounter some downtrend resistance here, but then above 220 would be your next buy point, and then 222, and then we would be well on our way to this double bottom W formation here, and then we've still got this big overhead gap that remains from before, which is $5 wide. So I think if you depending on how it goes today, there'll be again a opening gap below price this morning. But then if it can break out above 220, I think you can take that long and see how far we can travel up. And I think it's important to note that we do have a declining 50-day now, right? Here it was increasing. Now it's rolled over with the big move down. So if we are to get up into the 223, 224, 225 range, we're gonna hit that declining 50, and then that'll be a resistance point. And then for longer term traders, if we get above the 50, then you can always use that 50 as a go, no-go line to stay long against the 50 out in time, and then look for a rally, and then that will be or can be used as a pivot point. But if price breaks above the 50 here, probably going to just break into the gap and go ahead and fill that, because I think the 50, all things being equal, I think the 50 is a much more important support and resistance line than the bottom of this gap will be. And here on the 30-minute chart, you just see a little zoomed up level with some resistance levels in between. Let's move on to Facebook. Some really, good technical action in here, moving quite a bit for such a mega cap. I mean, yesterday it moved from 327 all the way up to 341, and we've had several of these moves over the course of the last several days. Some very active and profitable trading if you caught it right. Again, very much the same kind of action that we just talked about. Had come down here to 327, which the bears have not been able to break. And then I think coming out of Powell yesterday, I had put in this downtrend resistance line on the 60-minute chart. And so that would have been a buy point. Certainly a buy point would have been at 334 and then right on up the ladder. So if you're long, I think you stay long against 340. And if there's a gap up today, of course, there'll be a gap below price. But really, above 346, probably going to make a run up to 354 to attack those prior highs. So really nice move in Facebook. Apple, very much the same thing. They could not break 172. And so coming out of Powell, you had the recapture of 174 that we thought was important. Why? Because we had this large volume over price bar that we have been looking at over the last couple of days, and we said you really didn't want to break below, and it turned out that 172 was the line in the sand. But so then back going up the other way, we had buy points at 174, 176, and now we are a stone's throw away from an all-time high breakout above this 181 level. Tesla came off the lows, came up here to recapture 970. More of a not as dramatic of a move, but it did recapture this main level. So I think you can be long against 970, and I think you're going to hit a little downtrend resistance here at about 985, and then a much more important level is going to be 1010 on the way back up. That was an important level here, and back here. And you can see where the large volume over price bars come out. That gives you a big zone of value, if you will, between 1010 and 1120. So that's a big area of value that if price can break into it, I would expect that price would come up to 1120, and once it recaptures value, going to go up and explore the upper end of value and then decide if it's going to stay in that range or break out. Microsoft, again, we got the big plunge down, got that W formation. They tried to break it yesterday before the announcement with a little look below this 324.50 area, and then they shot it up. We had a big recapture zone right here at 329.5, 330, depending on how finely you wanted to tune that. So that was definitely a buy point. Same goes for 332, and then it stopped right where there was muscle memory at the bottom of the gap and this line and this big volume over price bar. So this morning, I would anticipate there be a gap up with the market. So then we'll have gaps above and below price, and it'll just, a flip of the coin whether they decide to go down and fill the gap below first or go up and fill the gap above. But I would say, if they decide to go down first and they pull back into 334 and that holds, that would be a great place to get long for a bounce back up. And I would anticipate, it doesn't have to be today, it could be tomorrow or next week, but I think they're going to go up and tag this 342 again just to explore that level. And of course, if they break below 334, you've got to abandon that idea, because I think if you lost 334, they would come down to 332 and possibly 330. So I think there's some really, really clear lines on Microsoft that you can shoot at. Same thing, Amazon. What were your buying cues? Well, number one, you had a divergent low, lower low in price, higher low in momentum. We had pointed that out. And your J. Powell rally buy points were recapture of the prior low at 33.40, recapture of 33.80, which we had on the chart. You had this high here that was taken out. You had the bottom of the gap, the prior gap here. Then you had 34.40, and then look where price stopped, where the muscle memory was at 34.60 at the top of the prior gap. All my same comments apply to Amazon here this morning. You'll probably see a gap up. So then there'll be an open gap below. Trade it exactly the same way as you would, any other item. You can stay long against the top of the gap and look for these higher levels. And then if you get that, if the rally extends, you can ratchet up either your stops or your strikes as you recapture these lower levels. Google, same exact thing. Bears could not break the lows. You recaptured this 2870 level, came in, broke downtrend resistance, moved into the unfilled gap at 2895, filled it, broke back above this really key level here that I have kind of bold at 29.25, and I think you can stay long against that. Why? Because this is a really important line, because support here, resistance all along this line, and now we're above that. You'll get overhead resistance at 29.40, 29.45, and 29.60, but certainly seems like it's bottomed out and moving higher. Just be aware of that opening gap here this morning. Netflix, very much like the other ones, you had a divergent low that we pointed out, lower low in price, higher low in momentum. That creates the bullish divergence. You actually got the bull cross in momentum right here, and you had a higher low in RSI and a break above 50, so that's bullish. The higher low in momentum coupled with the bull cross is bullish, and you had a breakout from a falling wedge, and you had a recapture of the low here at 597.50, and now you're up to 605. So I think that's going to be your pivot point this morning with the overhead resistances shown. Now, yes, this is bullish, but you can tell just from the price action, it's not as bullish as some of these other moves. I mean, this thing moved, what did it move? Maybe $10 on the spike. A lot of the other ones, I mean, this was only up 1%. You can look at some of the other FATMAAN names. They were up a lot more. And let's wrap it up here with SMH, the semiconductor index. I mean, monster moves. AMD, NVIDIA. I mean, throw a dart at the semiconductor index. That thing went off like a moonshot. What could you have done? Well, I mean, we had all this stuff, right? And if you were focused on it, you kept your wits about you, and you were fluid in your thinking, and you had your TA, technical analysis tenets, at your fingertips, what could you have done? We've called out 299 repeatedly over the last several days and even weeks. Going back here, support, fail. Remember, we talked about that, and we got the quick move down. There was a gap down here that got filled. Then it bounced. Then it came back again. Support. Then all the resistance levels. Resistance. Breakout. That's your buy point. Recapturing a key level from below is your buy. That was your first entry. We had a large volume over price bar right here at 304. That's your second buy point. So 299, 310, $11 in 2 hours. Hard to beat. And even, damn it, I missed this entry. Here's my next one, 304. You got a $6 move in the final hour of trade. You can't count on that, but you got to be in it to win it. So if you're, focused in on these different names and have your alarm set, there were opportunities to get in. So, it is what it is. Set your alarms, be ready, be open, be fluid in your thinking. Don't get committed to a narrative. And if you're a short-term active trader and you get that volatility move, those are some times where you can really get paid. And of course, you're not, I mean, you get a breakout here, you're not thinking, oh my God, it's going to 310. All you're thinking is, that's a technical buy and I want to be long, and I set my stop below in case it reverses. That's all you can do. That's all you can do as a trader, is take objective positions and then protect yourself by setting and honoring a stop. Because it's not a guarantee on something like a Fed announcement where there's a lot of volatility. I mean, it could have gone up here and then reversed. I mean, this all looks simple in hindsight, but the decision points are objective if you just go level to level and honor your stops. If you did that, you got paid really well yesterday. And if you didn't, what I would be doing yesterday and this morning is making some notes. What was I thinking? What was my psychology like? Did I freeze? Did I misinterpret? Did I not have my alarm set? Did I pre-decide that I wasn't going to trade it? You know, whatever it happens to be, write that down, and then that'll go into your catalog of knowledge for other, event type trading. So one last thing before I wrap up, don't forget we've got quadruple witching tomorrow, which means all the December expirations will happen tomorrow. There's a lot of positioning that'll roll off into next week. So, as we always say, there's that potential for a lot of volatility tomorrow and into next week as the market repositions for its final run into the new year. So let's wrap it up there. If you're new here, certainly thank you for stopping by. I apologize for running through it so fast. If you're interested in the SPY charts, I'm going to let that go this morning on the video. You can check that out on the blog site. All the pivot points are clearly marked, and you'll find some other information on the blog that I think will be helpful. So hit the subscribe button and the alarm bell, and then jump over in the show notes. There's a place where you can register for all my content with a simple email address, and that way you'll get everything that I send out. For the rest of the gang, apologies for the video being late. I'll do better next time, and I hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.